Guys, welcome back. My name's Aaron. This is Czar Finance, episode 37, technical analysis, support and resistance lines when it comes to stock stuff. Anyway, when it comes to stock market stuff, when you see the stocks going up and down, and you see those graphical charts doing this and that, those are the stock indicators indicating if the stock did well or did poorly based on support and volume throughout the day. Meaning, if there's a lot of demand for a stock, the stock price has jumped up higher. And if there was not so much demand for it, the stock price will go down. Usually it's indicated by colors, green or black and white, but usually green is going up and it closed high for the day, meaning it opened low, went up, say it was at $5 in the morning, and it went up to $10 at the end of the day. It closed higher for the day, so that means it was closed as a green candlestick. If it reversed and it was started high, say at $10, and it went down because not enough people wanted to buy, and there was a lot of sell-offs, the stock market would go down to $5, indicating a red candlestick. And we're going to get into candlestick identification in a little bit later. But on today's episodes, this is all about support and resistance. So when it comes to doing this sort of thing, I want you to think of a bouncing ball. Stock markets are every single stock company, Apple, Google, McDonald's, Burger King, Wendy's, you name it, whatever stock it is, it doesn't matter. They're all basically looking like a bouncing ball in the stock market. They bounce up and down. Now, the way to recognize this sort of thing is using support and resistance. And using what you see in the past, you can help determine what you can predict in the future. And by getting really good at analyzing technical analysis or analyzing the movement of the stocks, whether it's going to go up or down, and predict the future, will hopefully put you in a good position so you can hedge your bets in regards to making a wise decision to invest in a company, saying, hey, I know that this product is going to come out. The way my technical analysis looks, I can see that this is going to be a great shot for me and advance myself to a better platform in my portfolio and give me some great returns when it comes to investing. So let's take a look at this bouncing ball, and I'll explain it to you on a piece of paper right here. Take a look at this. Here we go. All right, so right here you see this little resistance sheet that I drew for you guys. Right here you have a support line. Ooh, where are we at here? Support line. And basically, think of the ball. It bounces, it goes ding, 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 and it bounces the floor. And when it hits the floor, it has nowhere else but to go up. So once it goes up, it's going to hit resistance, where enough people or saturation in the market has capped itself for that product, and where people either lose interest or say, well, I think it's doing pretty well. We're going to just chill out for right now. And it's going to go back down. Hits the ceiling, if you will, and that's acting as resistance. Then it's going to come right back down, and eventually, hopefully, hitting support again. Now, usually a strong support means, or a strong line of support would be, the more times it's bounced on the ground or bounced on here will indicate that there's a strong line of support. If it's only one or two, it's not that really strong and it could break through the ice. I guess if you want to analyze it as an ice category, that's fine too. So that's one way to do it with the support and resistance here. Looking at this, in this chart right here, you can see the same thing in the stock that's going up and down. Just really quickly, you can see it. It's going to climb. It's hit the support line. It's gone up. It hit resistance, kind of came back down. Boom. Where you see these two lines here, guys, where you see these two, where is this here? When you see these two lines right between here and here, you can basically draw a flat line and connect the dots and just sort of extend those dots out. And if the stock market hits that again, that's usually going to be considered your support line. So this is support 1, 2, 3, 4, 5, 6. So you can tell this is a very strong support line in which it hasn't broken through this, okay? Same thing with the resistance. It hits the point, comes back down. Hits the point, comes back down. Hits the point, etc. So this is a strong channel of market movement, and it's generally tending to go up in this direction. So that would be an upwards movement. All right, so same thing can happen going the opposite direction. You have resistance going down and support on this level going down when the stock market stock is not doing so well, and it maybe goes up for a little bit, it hits the resistance, and maybe comes back down. And again, the more times you tag it on those resistance and support lines, the stronger that line or wall becomes until it breaks out. So again, going back to the analogy, if you will, of a video game, if this gets a little bit easier for you, on level 1 you will have support levels, okay? You have the ball will bounce, 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 getting a support level. If the ball bounces, hits resistance, that would be considered level 2 of the game world. Well, it's not strong enough to get to level 2 yet, so it maybe bounces around up here. This is called high level, or oh my gosh, what is it called right now? Oh my gosh, I'm forgetting the name of it, but it's trending higher, if you will. If you were to split this level into different quadrants here, like 1, 2, 3, and 4, it's high basing up here, basically. It's up in this quadrant. It's trying to push and leverage up to level 2, and eventually it will crack and break through the ice, and it will bounce through that. Once it does, then this ball will bounce like this, and hit to level 3, bounce back and forth like this. Now this becomes support, right? SUPPORT, and now this becomes resistance. Okay, so that'll become the resistance line. So now went from support to resistance, and now the resistance line where it used to be now acts as support for the next level, for level 2 for that stock. And as you can see, as this keeps going up and up and up, you'll start to see a new channel or trend line going through these, as we mentioned earlier, in over here, or if it's going down, it'll start to look like that. So keep in mind of the bouncing ball, predict your motions. When you look at this, there's a great way to analyze these things, and there's lots of different stock charts to tell you when to get in and confirm that something has gone through the level, or when it's broken out, because sometimes there's fake ones. They kind of go up and then like, oh, just kidding, we're going to come right back down. You want to make sure that you break through here and break out through this. All right, so guys, that's support and resistance. Again, think of the bouncing ball. It goes from here down to support, then back up to resistance, bounces off, then comes back down to support, and then bounces up again. All right, my name's Aaron. This is Czar Finance. Thanks again for watching Technical Analysis, episode 37 on support and resistance. Bye-bye.